Good evening, everyone. This is Srikanth Rajan, and welcome back to the Market Pulse on Sunday evening, like every Sunday, where we discuss about what happened in the market last week and also what could be expected next week. Well, I did miss out on the market podcast on Friday. Of course, that was announced on Thursday as well that I would be traveling on Friday, and of course, it was an exciting day for me on Friday. I will discuss about that also a little while later. So now, quickly talking about the market, a very bullish week that was really fantastic in spite of global markets not withstanding the power. In fact, if you see European markets were down almost 1%, and if you look at the US market, that also has been on a continuous decline, especially the Dow. Dow has been on a continuous decline in spite of the major events that actually happened this week. So let us discuss about all those things. So, well, the week started off on Monday, as usual, with the market being bullish. In fact, if you see one pattern that was seen throughout the week was the first half an hour of selling and then a big recovery by the second half. So that was a trend which was kind of continuing, and then we could see the markets also continuing to be, volatile the entire week. But one interesting thing is the entire week, the FIIs have been on the buying side, and not just buying, big buying, I would say, because and even here and there was DIAs kind of booking some profit for 200 crores, 300 crores. But then the major buying came in from FIIs. That was a total whopping 13,000 crores of buying in just 1 week. Isn't that amazing? Of course, that was what was kind of powering the market for no reason. But of course, Thursday was a volatile day because Thursday, of course, Wednesday, there was a Karnataka election, and the exit polls did kind of hint, most of the exit polls did hint the majority for Congress. Well, I'm not into politics, but I'm just discussing this as a part of the stock market. So if you look at that, the exit polls did show that, and morning itself there was a small selling off, but then from there it recovered and day closed flat. So if you look at most of these days, either the day closed flat or the positive. That was a good sign in the Indian market, despite the global markets being weak. Of course, one of the most important thing to be looked at was the crude oil price has been continuously falling when recession fears in the US have been continuously increasing. So that was one factor which was kind of probably fueled in the market. And apart from that, the strong data which came in for India, of course, the results were good. But apart from that, even the strong results in terms of the CPI, the Consumer Price Index, actually, gave a great number. That was 4.7. In fact, the inflation was expected to be going up by 4.76. So the data has come on Friday evening after markets closed. It has come even better than expectation at 4.7. That was 4.7. That was fantastic. So this is much below RBI targets. RBI had a target of 6%, and now we're at 4.7%. So India as a country has, kind of come out of that inflation jitters right now. Now the same thing happened with the US on Thursday. We had the on Wednesday we had the US CPI data coming in. That also came in the negative. That was just up by 0.4% compared to the previous month. But year on year, it was a decrease and came below 5%. That also was a good sign in the US. But then along with that, the jobs data which came in the US was negative because the number of jobless have actually increased to the peak. So that is not a great sign. Along with that, the PacWest Bank in the US, which has been into the trouble lately, is also kind of giving out news that their deposits have been decreasing. And along with that, we could see PacWest Bank shares actually falling. So this is what is kind of have been keeping the Dow Jones down in the US, which is not great for now in the US. So definitely the US markets aren't looking in trouble and pressured majorly by the banks. And also the debt ceiling has not been hiked. The decision has been postponed. So that is also kind of keeping the markets low. But if you ask me what is going to happen in the market right now, my expectation is that now that the inflation figures have kind of tamed down, especially in India, at least I don't see any reason why RBI would be looking at increasing rates. If you look at the last monetary policy itself, RBI did not increase any rates, which was contrary to most of the global markets where they have been increasing continuously. So that is a great thing. I would say that's a positive thing. Now interest rates are not going to go up. Now, a big important news to all those people who want to invest on a very safe side, that is FD. This is probably the right time because I am not expecting the FD returns to go higher from now, since the market have kind of reached the peak. Now, the next important thing, gold. Gold also has been rising up and up. In fact, it has been touching new peaks every day. But then that also kind of should take a ceiling, is what I feel, because it should hit the ceiling because the markets are going to get stable. So if I've told this earlier also, if the RBI ever decides to cut the rates, so I'm not expecting it to happen soon, but maybe in 4-5 months or 6 months, we are going to expect that. And if that happens, we are going to see a big rally in the market. Now that's something that's important, right? So in fact, we were looking at Karnataka elections as important data, but then the exit polls had predicted it, and market already has factored it probably. So I'm not expecting the market to give a jolt tomorrow. So we might see a brief period of selling, maybe, but then that is not going to be a big impact, is what I feel, for tomorrow. So let us keep that aside for now. So now the major impact for Indian market would be, of course, the Indian elections, which is going to be happening next year. So that is something which will be in major focus for now. Apart from that, I don't see any reason why Indian markets can, not rise. So right now, the way the markets are doing, the way FIs have been buying, there are high chances that they continue to buy. See, let me tell you something very important. Now, during the COVID rally, we could see that most of the FIs were on continuous selling, especially the last year, that's 2022. So at this point of time, when they were selling, there were so many new retailers who would come into the market and they were buying all these shares. Now, most of these retailers who bought it at the peak of the market, that is probably when the market was at 18,600 or 18,900, are those people who are stuck at the price now, because most of the stocks have fallen after that. Now, these people will not sell until they get a price. So what will happen is, these FIs who are now trying to come back to India. Now see, remember one more thing. When FIs were quitting from India, the Indian rupee was kind of depreciated. And at that point of time, they were in actually a loss. But then the huge profits in the equity investment in India was kind of deterring them from, for avoiding or forgetting about the low or depreciating INR. And they continue to sell their inventory and take the funds out. But now when they are coming back, one is INR has appreciated better than what it was when they were exiting. Two, now the people they're not there to sell. So if they want to buy huge quantities, where are they buying from? So right now, the way we have been seeing the market, if you see last week, as the markets were kind of going bullish, that is when suddenly the MCSI reject on the HDFC trends happened, and we could see both of the stocks falling down by 5% on opening. But from there, it has been again continuously rising. They did not fall further. So this probably looks like probably a gimmick for the FIs to take an entry. That is one thing. And second thing, FIs have been continuously entering into NBFCs, banking sector, auto sector, and of course the IT sector, which is kind of beaten down really. So probably these are sectors which is kind of getting them interesting, but then it is proving costly to them. Now, if they are going to buy all these stocks at the higher price, naturally the prices are going to go up, and that can actually drive the markets higher. And not only that, this could probably attract more retailers into the market again. So if you see, off late, since the market have been volatile and the markets have been kind of flat, many retailers have actually quit from the market. But at this point of time, if we again see a rally, or if at all there is a news, that 18,900, which is the top peak of Nifty, was broken, then that could actually bring in some more interest into the market, and that could be even a bigger jolt to the FIS, because they have to buy higher from Indian market. So if that is the situation, I would say Indian markets are definitely going to see a rise in the upcoming few months, and of course few years. It's going to see a major difference. So a lot of fund flow expected in the Indian market. That means the markets have to definitely go higher. So I am only expecting the market to go higher and bullish, but of course with volatility until Indian elections happen. So the next 6 to 8 months are going to be volatile, but don't be surprised if 18,900 is broken any of this time. So we really don't have to wonder about it, but of course things are looking good for India. Now it would, many times it also happens that when everything is looking great, as something new comes up and the market falls. So definitely Indian markets are not to be predicted, but of course anticipated. But one important thing is, on the long run, Indian markets are definitely going to perform, and of course we are going to see a lot of money. Now, one thing I'll tell you, as per my experience in the stock market, I've seen this: whenever the markets have kind of been a long consolidation mode, like now, if you see 2022 to now 23, markets have been on a long consolidation mode. So there has not been any return, but then markets have always compensated for the returns which were not given in any of these years. So if the market has not moved last year, the next year when it moves, it will not only move for the next year, but also the last year compensation. So overall, I am sure to see some good movement in the market. So these are few things that could happen. Again, I am not a SEBI registered analyst. I am not telling you to, take stocks or buy stocks based on my analysis. But in fact, yes, we can guide you at MPI Invest to invest wisely and grow your money. Now, coming to the next important part, coming to some stock specific news, Tata Motors came out with good results. Of course, the results mostly be factored in, because if you see, Tata Motors has been on a continuous rise and crossed 500 rupees. Similarly, ITC has been on an up move, and of late we've been seeing some profit booking in that. In fact, it has had a very good run this year, so I don't mind if there was a profit booking. In fact, I myself have booked some good profit out of ITC already. So next important stock to be focusing on is SBI. Now, one thing important note here is SBI has been on a consolidation mode, and also some selling off has been seen in SBI of late. So the results are to be looked at. I am expecting the results to be decent. In fact, SBI and ITC, both the results are coming up on Thursday. So that is one important thing to watch for this week. Apart from that, I don't see any important events this week. In US, of course, Walmart is coming out with the results, which again is going to be decent. I would say may not be bad. But of course, Disney came out with bad results last week, and that was kind of again demotivating Dow Jones, and that fell down last week. So overall, I would say right now, US markets have been underperforming for the last 2 weeks. European markets have been underperforming. Indian markets have been overperforming. But then all these markets have to come to a level. So at any point of time, I am going to see, I'm sure I'm going to see a profit booking in the Indian market. But that does not mean that Indian markets is reversing. But I feel that would be just a normal correction from where probably we could see the market rising up again. So that is something that is expected about the Indian market. Now for the US market and European market, since both of them have been in consolidation for the last 2 weeks, I am kind of expecting that these markets should start doing well. Now, if they start doing well, that could give some additional power to Indian market, and that is something that could probably drive Indian stock market to about the higher level. So right now, if you see, 18,200 has been acting as a very good support. 18,300 also has been crossed. So that means probably this week we might see the market probably going above at least 18,500. If that happens, then of course I'm expecting this week to be expiring between 18,200 and 18,600. So this is my expectation for this week. But however, let's see how the market takes a turn. So apart from SBI and ITC results on Thursday, I don't see any other major results coming up. And with ITC and SBI results coming up on Thursday, the major major Nifty 50 stock results would be completed. And if that completes, then probably the season is over. Then it is only FII buying that can actually drive the market. So we might see some break, or we might see the stock market kind of hovering around 18,500 to 18,000 to 18,500 kind of range for this entire month. That's what I'm expecting. However, I'm not expecting 18,900 to be hit in this month. So, well, at least 18 to 18,500 is a good range for this month, I would say. So, these are few things which I had to discuss. If you have any questions, of course, do post them in the comments. I would be answering them in the next podcast. But for now, I think I've covered everything at all for next week and this week. And like I told you, I am expecting the market to kind of expire between 18,200 to 18,600. And unless there's a major profit booking kicking in, I would say if you want to be really safe, 18,000 to 18,500 could be a good range. So that's it for now. This is Sringaran signing off. But before we leave, do remember to subscribe to our channel if you have still not done that. It's high time you do it. And do press the like button and share the podcast with your friends and relatives, help them learn and invest together with us. And for MPA family members, of course, I've got a lot to talk to you about yesterday's travel. I was in Mumbai. For other members who are watching us, I will probably share that on some other time. But then for MPA family, of course, you have a priority. So see you in the meeting at 7:30 where we discuss more about the market and, of course, have a great time together. So goodbye. Have a great week ahead. Let us discuss more about the market in the daily meeting. See you. Goodbye.